Hi, this is Maho from ByteBank, and this is really exciting. This is my first video and a topic I find extremely exciting. It's credit. Your credit score is a really important thing. Right now in the United States, we spend more on credit than we ever have in the past, more than any other country in the world. So it's really important to understand how credit works and to have a good credit score. But here's the thing. Are you trying to build your score, or do you not even think about building your score? And if you were to try to build your score, would you know where to start? Do you know where to start? Well, whether you're starting from zero or recovering from a hit, I'm going to make a beginner's guide here for you that will show you how to build your credit fast without going into debt. Your credit score is basically a number that tells lenders how likely you are to repay money. The most common system is called FICO. It ranges from 300 to 850. A good score opens so many doors for you. You get better rates on car loans, credit cards, mortgages, approvals on apartments, or even jobs. The job that I work in on my day-to-day life, you will get declined if you have a bad credit score. So having a good credit score is a really important thing. I'm going to go over 6 ways that you can really boost your credit, and if you do these 6 things over the course of these next 6 months, I promise you will have a better credit score and you'll be one step closer to financial freedom. The first one is going to be a secured credit card. Now, what a secure credit card is, it's a credit card that you would put money down as a deposit, and that's what you would use as your line of credit. Typically, the lowest it can go is between $200 to $250, depending on the service you use, upwards to $5,000. Now, I would recommend going as high as you can, but again, this is, meant for people who maybe don't have that much money. But if you do, great. So what you want to do with this secure card is spend money on it, go to the grocery store, gas station, whatever, and pay it off immediately. It is very, very important that you pay it in full and do not carry a balance. This is going to be huge for something that I go over a little bit later, but another thing is when you have a credit card, if you don't carry a balance, if you have a zero balance when your bill is due, you don't pay interest on it, and credit card interest is very high. In the description, I'm going to leave a link to where you can apply for a secure card online if you prefer to do it online. Another way of doing it, go down to your local credit union or bank. When I started, I did it through a credit union, and tell them you want a secure card. They'll take your application, take your $200, whatever amount you want to use. Usually, you can have the card in hand within a week or two. The next thing is a credit builder loan. Now, these are not as common. Not all banks have these, but there are ones you can do online on websites like Self, Kickoff, or Chime. Chime, I know, is one of the more popular ones. They offer small, safe loans designed to build your score. You don't get the money up front, so you sign up for the loan, you make your payments, and then once the loan is paid, you get the money. So it's a 2-in-1. It's like a nice savings plan where you're maybe each month you're putting $50 at it, and you're making your on-time payments of $50, and then after 10 months, you get $500 back. You can use that $500 if you wanted to kind of start backwards and do the builder loan first. You make that, you save up that $500 by paying the $50 for 10 months, and then you use that $500 as your deposit for your secure card. That's another great way of doing it. Again, in the description, I'll leave a link to Chime. There's actually a referral program at Chime. If you set up a Chime account and set up your direct deposit to it, which you can use to pay your loan, you'll get $100 for free, and I'll get $100, so it works out for both of us. This next one isn't really possible for everything, but if you're a younger person, or maybe not, I don't judge anybody's situation, but talk to your parents, sibling, or somebody that you're really close to, and ask if you can become an authorized user on their card. Now, they have to understand what this means, but that's a conversation you can have with them. But if you become an authorized user on their card and they use their card, it will build your credit score without you having to do anything. This is something that I did I'm doing currently for my child, and it's a really great way for parents to build up the credit score for their kids, and not a lot of parents don't even know about it. So it could be a conversation that you have with your parents, your siblings, a loved one, whatever. This is a really good way to do it, but I know this one not something that everybody has access to. Now, the really important thing is to pay your bills on time every time. One of the ways that your score is calculated is based off your on-time payments. If you have anything less than 100%, it puts a pretty big hit on your credit score. So pay every bill on time, every time. Credit card, pay it off before it's due at the end of the month. If you spend $50 in groceries, pay $50 on that card. You don't necessarily have to do it immediately, but it's to build the discipline to do so. Personally, I pay my cards at the end of every week. At the end of the week, every week on Friday, I go in and I pay whatever the balance is. So and that way I know how much I spent each week, but pay your bills every time. Now, earlier I talked about when you get your secure card, how much to get it for. There's something called credit utilization. Well, credit utilization is how much total credit you have available to you. So if you only have the one card for $500, that is your utilization cap. Now, if you have one card for $500, one card for $1,000, a vehicle loan, a mortgage, blah, blah, it'll combine all of those things, and however much you're using, that's your utilization. So if you have a card with, let's say, a $300 limit, you stay under 90, that's your 30%. Under 10% is ideal, but that's really only possible if you have really large lines of credit. Now, this is why I said if you get a card for $300, to be under your 30% is $90. But if you get a card with $1,000, then to be under your 30% is $300. So it's a little bit easier the more you put to stay on that low utilization. That way you can, for example, if you get a limit for $1,000, you can each week put your groceries or whatever on that card, and that'll easily keep you under that 300 or something, you know, on the smaller end. Credit cards can actually be a huge benefit to you, and that's something I'll go over in a video in the future, but I'm sure you've heard that credit cards are bad, and they can be, but if you have the discipline, credit cards, if you're a maximizer, credit cards can work for you. The last thing is to monitor your credit regularly. I cannot stress enough that you should be checking whether your banking app has it built in, or you're using Credit Karma, Experian, annualcreditreport.com, whatever you're using, track your credit, because once you start becoming a little bit more credit worthy, there are going to be people that are going to try to steal your identity. And so keeping an eye on those things is going to let you know what inquiries you've made and things of that nature. One, it'll help you track how well you're doing, but two, it'll also help you prevent fraud from potentially happening on your accounts. So those are the 6 things that you can do. Now, this next part, I want to go over mistakes that you can make and how to avoid them. The biggest mistake you can do is applying for a bunch of stuff all at once. On your credit score, there's something called hard inquiries. Hard inquiries, they do fall off, but they temporarily lower your score. So if you apply for a bunch of stuff, you're gonna have a bunch of hard inquiries, and it's gonna hurt your score. So I know when you're first starting, it's kind of hard not to have inquiries, but as you go, try not to just apply for stuff willy-nilly. This one I also will stress very hard. Avoid payday loans, buy now, pay later traps. They don't build your credit, but they do trap you in debt. You are paying interest. There's so many ads for them online where you'll see, you know, whether you're scrolling through social media or something, and it's like, hey, you know, through this payday loan, I get my payroll today instead of on Friday. Those are a trap. Do not do those, please. Another one, which is kind of unintuitive, I still have my original secured credit card from my credit union initially, because this is my oldest account. It is my first account. It is my oldest account. Your age of your credit history is actually a pretty big factor in your score. So I have this secure card. It literally has a balance of $1,000. I have my Discord monthly payment on it. That's literally all that's on it. I pay $10 a month on it, but this is my longest kept account, and the age of your accounts actually is something that will increase your credit score. So try not to close accounts if you can. So let's put this all together, see how we could actually use this. You can start off by getting a credit builder loan. You enroll for Chime, you set up your direct deposit on there, you get your credit builder loan, you make your monthly payments from a portion of your direct deposit. Fantastic. Let's say you do it for let's say you're pretty aggressive with it and you do $75 a month. If you do $75 a month for 6 months, that's $450. And then you take, let's say, another $50, get you $500, put into a secured credit card. You take that $500, you put it on a secure credit card. Now you have this secure credit card, which is what's called a revolving line of credit. You can each week buy your gas with it, or whatever your groceries, whatever you do with it, and then pay it off at the end of the week, pay it off at the end of every day, pay it off at the end of every 3 days, however quickly you choose to pay it off, but pay it off before the utilization goes past 30%. For $500, that would be about $150. Once you've paid all those bills on time, done your 6 months for your credit builder, maybe another 6 months with your card, kept your utilization low, and you've been monitoring your credit, I will say that the likelihood of you having a 700 score after those 12 months is probably pretty high, depending on how you've set yourself up or where you're coming from. If you're coming from no credit at all, it's very likely you'll be at a 700 or higher. If you're coming from repairing your credit, that's a little bit harder, but this will still put you in a good position. To wrap this all up, credit isn't about tricks. I mean, these sound like tricks, but they're not. It's about consistency. Start small, play smart, and your score will grow faster than you think. If this helped you, please drop a like, subscribe for more practical finance, and I plan to do tech insights as well. Feel free to engage in the comments. I would love to do more of these for you. If you have any other questions about financial stuff or a video you want me to make, I am here for it. Thank you so much for taking the time to listen, and have a great rest of your day.